Hey guys, so in today's video I wanted to talk to you about this beautiful 1 to 3 risk to reward trade that we took on Euro USD, which not only myself but everyone in the Discord was able to capitalize on and generate a massive 3% on their accounts following the Judas swing framework. So let's jump straight into it and break down not only this trade but also something key that I've had a lot of messages about is understanding what is a valid structure break and what isn't a valid structure break. So let's jump straight into it, and the first thing that we actually have to do is refer to our Judas swing framework. Now again, if you guys haven't done so already, please don't forget to go down in the description and download this framework for completely free. Whilst you're down there, please don't also forget to leave a like, comment and subscribe. But let's jump straight into it. Our first step is to actually understand our directional bias. So let me start with replaying this back over here and jumping up to the 15-minute time frame. Now, when we jump up to the 15-minute time frame, what we're going to be doing is identifying what our higher time frame directional bias is trying to tell us. So let's jump onto the charts, and what we can very clearly see is that we were bearish, creating a series of lower lows and lower highs. But right here, we broke this structure and we put in a new higher high. Since then, we've been creating a series of higher highs and higher lows. And now we've just put in this higher high. Therefore, order flow tells us that we're anticipating a higher low before a continuation higher. Therefore, this trade or this bias is bullish. Therefore, we are looking for buys. Now that we've identified our directional bias, we move on to the next step, which is understanding that the Judas swing happens between 7 and 9 a.m. UK time. Now, let me just clarify something. When it says between 7 and 9 a.m. UK time, what this means is that this is the time window where we want to see a sweep of either the high or the low of the Asia session. That is simply it. You can still take an entry after 9 a.m. However, all we want to do is see a sweep of either the high or the low between this time window. Now, if you get a sweep at say 8:30, but the market structure shift doesn't happen until 9:30, that is perfectly fine. You can still take that trade. You just have to make sure that the Judas swing, which is the sweep of either the Asia high or the Asia low, happens between 7 and 9 a.m. UK time. So just change this according to your time zone. Now, the next step, as we just spoke about, is we have to identify our Asia session high and low, and this will become our liquidity. So all we're simply going to do is mark out the high and low and wait until we get a sweep. Now, because our directional bias is that we are looking for buys, in this instance, we actually want to see the low get slept so that we can then wait for a market structure shift so that we can look for buys. Now, another confluence that I've added into my trading is that now that we've had a market structure shift here and we are now bullish, we want to identify higher time frame areas of interest that price can potentially return to. So what I had was this demand zone marked out, and the reason why I had this demand zone marked out is because this is where price stagnated before all of this influx of volume came into the market and broke structure to the upside. Therefore, this is a high level volume area where price can come back to before continuing its pro trend move. So now that we've identified our higher time frame area of interest, what we now want to do is again mark out our Asia session high and low. So let me quickly just replay price back to exactly 7 o'clock, drop down to the 1 minute so I can get it perfectly on the T, which is going to be right there. So I use an indicator called the Asia session range by Rob Minty, and all this simply does is it just highlights in this nice blue box the Asia high and the Asia low. So I only use this because it makes it easier for me to identify it. I don't have to do it myself and sit there and work it all out. The indicator just does it for me. But if I didn't have the indicator, I would simply just be marking out the zones that was the highest between midnight and 7 a.m. UK time. So the highest and the lowest point in this trading range. Now, we've got our trading range marked out. We move on to the next step, which is after we get a sweep of either the high or the low, we drop down to the 1 minute and we wait for a market structure shift. So again, if we go back to the chart, now all we're simply going to do is wait for a sweep first of all, and there we have our sweep. Now that we've got our sweep, we now wait for a market structure shift. So let me play price on, and this is something that I really want to touch on because this is something that a lot of people have brought to my attention that they are struggling to understand. Now, let's identify a structure together. We have a series of lower lows and lower highs. When we put in this lower high, we then put in this lower low. Therefore, what this means is that our trading range is now this. This is our trading range from this high to this low. Therefore, seeing price do this and break structure here is not valid. This isn't a valid market structure shift. And the reason why there isn't a valid market structure shift is because this is our most prominent high and this is our most prominent low. Therefore, we have to see a break of this for it to be considered a market structure shift, because this is our highest point. This is our lower high and this is our lower low. Therefore, if price was going to continue in its pro trend direction, it has all of this area to pull back within before continuing its pro trend move, and it still wouldn't be classified as a market structure shift. Only when price breaks above here is it considered a market structure shift, because this is our most prominent high. I hope that makes sense, guys, because again, if we take a look at all of this one more time, our structure is like this. So we've got this lower high and this is now our lower low. Therefore, because this is our trading range, anything that happens in between is simply just complex structure. It's an internal structure break. If you drop down to the seconds time frame, what you will see is this was actually an area where there was a market structure shift on the seconds time frame. But because we're not on the seconds time frame, we're focusing on the 1 minute. This isn't a valid market structure shift for us because we're not trading on the seconds. Therefore, for us to see a valid market structure shift, we need this to break. Therefore, until that breaks, we're not going to do anything. We're simply going to sit on our hands. And then when we get this break right here, now this is a valid market structure shift, because what has price done is given us this lower high, lower low, and now we've just put in a new higher high. Therefore, order flow tells us that we're anticipating a higher low before a continuation in the pro trend direction to put in a new higher high. I really hope that makes sense, guys, because this is something that comes up quite often, and this is where a lot of people take losses because this isn't a valid market structure shift. It might work once, it might work twice, but there will be multiple times when you take a trade similar to this and it will take you out because it is simply building liquidity before actually giving us the pro trend move. So I would highly suggest jumping on the charts and trying to see if you can identify this. And what I will do is I will play price on, because today, which is the 1st of February, we actually had this exact same thing happen where price came down, gave us an internal structure break, and a lot of people mistaking it for an actual market structure shift. They took their entries and they were stopped out before the actual pro trend move happened. And we were able to take this in the Discord, whereas a lot of people who didn't understand this were actually taken out and got their stop losses hit. So I hope you guys understood that and have taken that on board. I highly suggest jumping on your charts to understand the difference between a market structure shift and an internal structure break. But nonetheless, we have now done a market structure shift. So we can mark this out right here. And now we can go back to our framework, and our framework says that our next step is to identify our fair value gap. Now, our fair value gap is going to be where we take our entry. And once we've identified our fair value gap, we put our stops at the most recent high or low, and our targets will always be the opposing liquidity. So let's jump onto the charts. And in today's instance, or in this trade's instance, what I actually did was mark out this entire order block right here. And the reason why I had this order block marked out was because we had this very small fair value gap right here. So let me quickly mark that out so you guys can see it visually. It is very, very, very small. So that is our fair value gap right there, which is very, very small. However, this entire move is what I had marked up because this is what actually gave us the break of this structure. So now that we have this marked out, we simply take our entry at the beginning right here. We put our stops just below the most local low, and we always target the opposing liquidity, which in this instance was up here. And this was for a beautiful 1 to 3 risk to reward trade, just like this. And if we play price on, what we can see is price came back, tagged us in, and then immediately started to run in the opposite direction, and there she goes. So then we started to move, and it took a little bit of time, but at the end of the day we started to push higher and higher, and eventually we go up and hit our take profit. So again, not only myself but everyone in the Discord was actually able to capitalize on this trade. I said that price is up 2.4% and I'm going to take full profits, as I didn't like the price action that was happening up here. So I actually took profits just a little bit earlier, but then trade did go on to hit full TP. So that was the trade, guys, and it just shows that you have to understand market structure in order to really capitalize on these trades. But having said that, let me quickly move on to today's trade. And in today's trade, what we can see is the exact same thing that I was just talking about, where again, if we mark out structure, what we can see is that we've got a lower low, a lower high, and now we get this lower low, a lower high, and a lower low. Therefore, if we look at market structure and I replay price, what I noticed a lot of people were doing this morning is a lot of people were mistaking this right here for a market structure shift, because this is what they thought was a market structure shift. But as I said earlier, guys, this is simply just liquidity and an internal structure break. So this isn't a valid market structure shift. Our structure is that this is one entire move. Therefore, this is our trading range. So for price to do a market structure shift, it has to break above here. Only then will there be a market structure shift, because inside of this trading range, price can pull back as high as it wants up until here before continuing in the pro trend direction, and nothing would have changed. It would still be bearish because this is our trading range. So today, like I said, a lot of people actually were taken out because they took entries here anticipating price to move like this because they thought that this was the market structure shift, when in fact it wasn't. This was the actual trading range. Therefore, again, if we play price on, what we can see is that price comes down, gives us a lower low. So we've got lower low, lower high, lower low. Therefore, our trading range is now here. And if we play price on, price comes up, and then eventually it breaks above just there. And when it breaks, essentially this was one singular move. So if I remove all of this, how we can anticipate price is that this was the lower low, the lower high, the lower low, and now this was the market structure shift giving us a higher high, and then order flow tells us that we should get a higher low before the pro trend move. So this was another trade that we took today. Well, we didn't actually get tagged into this trade. This was something that I sent into the group, but unfortunately we wasn't tagged in. But like somebody said in the Discord, it's better to wish to be in a trade you weren't in than being in one you wish you weren't in. So we didn't get tagged in, but that doesn't really matter because the bias was correct. The trade played out. We didn't take a stop loss here because we understood that this isn't a valid market structure shift. It is simply an internal structure break. So I hope you guys found some knowledge in this video and understood the difference between a valid market structure shift and something that is just internal structure breaking due to our trading range being like this. So I hope you guys took some value away from this video. If you did, please don't forget to leave a like, comment and subscribe, and I will see you guys in the next video.